even if the confidence is starting to return to the housing market, and we've seen house prices rising in the Tier 1 cities, the Tier 2 cities, flat at this stage in the Tier 3 cities. We've seen house sales overall rising. The problem is that there's still this existing overhang of unsold inventory, and until we eat further into that, we're not going to see the construction cycle getting rebooted. And of course, it's that construction cycle that uses 70% of the steel used in China, and that's the one that focuses on our key commodities. Although, as you know, having said that, the iron ore prices remain steady for the last couple of months, which undoubtedly is encouraging.
Yeah, around the 54 a tonne level. Bill, when it comes to sort of bigger pictures concerns now, you've got the yuan depreciation. It was seen and maybe as a preemptive move, and maybe the timing in hindsight could have been better. Where to next on that front? I mean, is it really now a market mechanism that's going to make the determination, or you still sense that, like many central banks on many continents, the PBOC does intervene?
Oh, look, I would have thought that the movement was entirely understandable given the loss of competitiveness they've experienced against the Japanese yen and against the Korean won and against most of those other emerging markets' currencies. So I wasn't surprised at all by that response, but I think they are concerned about capital outflow, and as a result, if the market started to believe that they were on this long journey of continually devaluing the currency, then that might create even greater instability problems with regard to that capital flow story.
Does it begin to feed into also concerns over inflation? The lower the currency goes, and as you pivot from an export-oriented into a domestic consumption growth story, that having that depressed currency does play back on you when it comes to the cost of imported goods?
Yes, look, I think there is that. We've looked at this quite closely, and there is that high correlation between the level of the currency and inflation. And so if they can push the currency down, that will tend to give a further boost to inflation. So these are really, really big issues, Carson, at the moment, because as we know, that major source of weakness in the world economy at the moment is around those emerging markets, and they're directly affected by China, not only in terms of Chinese imports from the emerging markets, but also the impact it has on their commodity prices. So that whole emerging markets China story, I think, is the one that's leading markets at the moment. It's the key one around people's views about global growth. It was the key factor that motivated the Fed not to change rates. So this story about the consumer, I think, is a very, very interesting and important one, but it's not telling us what might happen in that industrial sector, not telling us the impact that the excessive level of credit and the excess capacity in China at the moment, how that might play out in the next few months.